Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Recovery, that is the theme that we are tracking right now, massively from the lows. Nifty, Bank Nifty, all of them in the green. The midcaps too are in the red right now, but there's a massive recovery.
You're absolutely right. In fact, when we opened today morning, it didn't look as though we would see any green on the screen. But very surprisingly, it's been a very sharp and strong recovery, and buying has emerged from lower levels. But first up, lots lined up on the show today. Let's take a look at the headlines. The market recovers strongly after a gap down, sparked by escalating geopolitical tensions in West Asia. The Nifty reclaims 22,000, led by financials and FMCG. Midcaps underperform.
ICICI Securities gains after reporting its quarter 4 numbers. Company sees a 17% surge in its revenue, while EBITDA surges 18% sequentially.
GMR Airports gains after reporting its operational update, while total passenger traffic jumps 5% on a month-on-month basis in March 2024. FY24 sees a 20% surge in total passenger traffic on a year-on-year basis.
Landmark Cars gains after total revenue surges 8.1% on a YY basis. The company says they have a strong pipeline for organic and inorganic expansion.
India goes to polls as votings for the first phase of Lok Sabha polls for 102 seats across 21 states are underway. In the largest of the 7 phases, voting takes place across all of the 39 Lok Sabha seats in Tamil Nadu, which saw a 24% voter turnout as of 11 a.m. Rajasthan witnessed a 23% turnout, while Maharashtra registered a near 20% voter turnout till 11 a.m.
Okay, all right. Those are the top headlines that we are tracking for you. But markets, they continue to be the big story. We are above that 22,000 mark on the Nifty, a massive recovery from the lows. And as Vivek was mentioning, at the start of the trading session, we didn't even think that there could be some green on the screen. So at the day's high right now, the mid-cap index, though that is in the red right now, but it was down around 800 points at a point in time. So a massive recovery there as well. I think 800 points from the lows, again at the day's high. The Bank Nifty too is doing well, and it is the banking index that has led to the recovery that we are seeing right now. So it's a surprise, and something like this happened on the show yesterday as well.
That's right. Yesterday it was on the other side. We were caught on the wrong foot in terms of, especially bulls did see a very sharp sell-off, emerging exactly at around 130. Today, if we had to quantify the kind of recovery that's actually happened, have a look at the Nifty index. It's up over 200 points. The Nifty Bank Index is up over 700 points. Both of these recoveries are from the opening lows or the day's lowest point. Like you mentioned, Mid-Cap Index up almost 800 points, still in negative territory. And the Small Cap Index, again, a 350-point recovery. But in our special segment, Mid-Cap Movers, we have Hormas to take us through the mid-caps that are moving around in the session.
You spoke a lot about the recovery in the market. The question is, will that sustain, especially we are going into the weekend now, and whether the people would be wanting to carry home positions on the weekend. But a recovery is a recovery nonetheless, as the screen is showing. Start off with some losers then from the mid-cap space first up. And we'll start off with Tata Communications. The stock is not doing well post its earnings, now 5% lower as we speak. Supreme Industries is down 3.5%. Angel One also continues to decline post its results, and IIFL Finance among the losers as well. Some names that are going to report earnings later today, and HDFC AMC is one of them. That has recovered significantly from the lows of the day, now just 1.5% lower, and Jio Financial Services also set to report earnings later today. Some other stocks that will come up on your screen that are doing well in today's session, and those are defense stocks. And considering the geopolitical tensions that are surging in West Asia, the defense stocks are doing well. Data Patterns is up 2.5%. HAL, Bharat Dynamics, Cochin Shipyard, all doing very well for themselves, almost at or near the highest point of the day. The other segment that is not doing well though in today's session is real estate, and Phoenix Mills is leading the pack. They're 3% lower. Sunteck Realty is also down 1%, as is Godrej Properties. Some stocks that are doing well on the back of volumes, and those will come up on your screen now. Just Dial continues to surge well above 1,000 rupees, now 5% higher there for Just Dial. Escorts Kubota is doing well. Motilal Oswal is up 8%, and they informed the exchanges just a few minutes back that they're going to consider a bonus issue on the 26th of April. So 8% higher for Motilal Oswal. And TVS Supply Chain 13% higher now for that stock at 183, but still below IPO price, mind you. And some stocks that are bucking the trend further Within the broader markets include the likes of Raymond, Himadri Specialty Chemicals and Triveni Turbine that are doing very well in today's trading session. Back to you.
Okay, interesting list. And the big Q, of course, it's weekend. So let's all be happy about that. Thank you so much, Harmas, for joining us as always. It's a good time to get in a technical check on the markets as well. Himain Kapadia of KR Choksi Securities is joining us now. Himain, good afternoon. Thank you so much for joining us. Well, yes, the next big question is whether this recovery will sustain at these levels. What are the charts suggesting?
A very good afternoon to you, Son. Thank you for having me on the show. Sorry, it's a pleasure. Like you said, will this recovery sustain? It's a bounce. Like you said, Sonal, it's a recovery. It's not a rally. We've been down, 1,000 points from the high, and over, say, 1, 2, 3, 4, 5, 6, 7 trading sessions, 1,000 points gone. And so, yes, a bounce is underway. Is this going to sustain for a couple of days? Yes, because even Dow Jones is getting oversold, and we've sort of followed US peak before us, Sonal. And now I think Dow Jones is probably going to recover and close in positive territory today. So yes, a bounce 22,300. We are at 22,030. First headache it is 22,100 only, or 22,300 is possible. But beyond that, I'm not sure, because I still feel this time the weekly picture seems to have turned a bit wobbly. So every time, if you notice over the past some time, we see a couple of weeks of a correction. Even the mid cap, small caps recover, and we post a new high. But this time the Nifty seems a bit shaky on the weekly chart. So as of now, it's a recovery. I'd love to go wrong on this. To convert it into label it into a rally, we need time as well as price. And a test of the bottom today. I believe a small bottom has been formed today. Sonal.
Well, that's very good to hear, Himain. So you're saying that today's low becomes very crucial and could be an intermediate bottom. But Himain, any individual stocks on your radar in terms of either buys or sells?
Yes, Vivek. Couple of stocks. I mean, it's frankly speaking all over the place, but IT has recovered. IT has been down to 7 weeks. I believe IT is deeply oversold. So stocks like TCS, maybe TechM, Wipro, Infosys, all of them are close to supports and are in the throes of a bounce back. So I have a contra buy call on Infosys today. We're at around 1412. So a buy at 1410, a stop loss of 1380, target of 1470, risk reward ratio 1:2 on Infosys. Secondly, there is once again a contra buy call on Gujarat Narmada Valley, GNFC. We've recovered. I mean, what I believe is we've exhausted a pretty long decline, which was around 12 weeks or so. Now we staged a recovery, and the recovery has been corrected in line with the market. So it's on a verge of giving an upward key reversal today after taking support on the 55-day exponential moving average. What I mean to say, looks set for a bounce. So one can buy a GNFC at 675, Vivek, stop loss of 650, target of 725. This is probably a 2.5 weeks sort of call, Vivek.
Okay. All right, Himain, thank you so much for joining us and have a great weekend ahead. While we are talking about recovery for the Indian markets from the lows, just take a look at crude prices. They have fallen from the highs. They are at that $87 per barrel mark. And in the morning, they were around $90 per barrel mark. There was a sudden spike because of the tensions that we were seeing in West Asia. So just a quick crude check, because they have seen a sharp fall from the highs. We'll slip into a short break. Kailash Lalpuria from Indocon Industries will join in next to discuss their recent acquisition. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Well, Indocon is the stock on our radar today. The company has recently acquired US premium national brand Vamsuta. We have Kailash Lalpuria, the Executive Director and CEO of the company, joining us now to discuss this and talk about the synergies with this particular acquisition as well. Mr. Lalpuria, thank you so much for joining us today. Well, I wanted to understand what are the benefits of this acquisition, what made you go ahead and acquire it, so how would it add to your revenues, your capacities and total addressable market as well?
So we are quite excited by acquiring this brand, which is a national brand. So as a company, we have elevated to the premium and brand segment. What we sell, we have a complete product basket selling, not only sheet sets as a commodity, but also fashion bedding, utility and institutional bedding. So we would leverage all these products and the complete basket, omni-channel and globally as well. Being a national brand in the US, North American market, we can sell well to surrounding NAFTA countries like Mexico and Canada as well. So what we see is the expansion of markets, expansion of customer base, expansion of product base, because our core competence is bed linen production, but we can extend it to the outsourcing model as like many other brands too. So by adding this brand to our portfolio, we will be also looking very strongly to the Indian market, because we have a lot of Indian aspiring consumer as well. So we see a good growth in the coming years in the branded segment, and this will help us, achieve new milestones.
Okay, Mr. Lalpuria, couple of questions. Number one, how did you arrive at the valuation that you decided to pay for the entity? We believe it's close to 85 crores that you paid for the entity. What has been the revenue profile of the company over the last couple of years, and how will it add to your revenue mix as far as FY25 is concerned? You did mention that the margin profile there is slightly higher than what you currently enjoy. So can you give us a sense of that as well?
Certainly. See, we have been growing steadily at a CAGR of almost 12% for the last 5 years. We reported in FY23 a revenue of 3,000 crore plus. We have given a guidance to have a revenue growth of almost 15 to 20% and a volume growth of almost 20% this year. We have also given a margin profile guidance of 16 to 18%, which is better than last year. Going forward, what we are strategizing is to add on certain brands and licensed brand as well. This we have acquired from Beyond INC, as this brand was doing very well at Bed Bath and Beyond. The last year revenue till the defunct Bed Bath Beyond went out of the business, they were doing a revenue of almost 500 million plus. So it is a national brand. It is a specialty and departmental store brand. So it will give us a leverage to see that we upgrade ourselves to the premium and branded segment in the US. It will open doors to both B2C and D2C strategies as well. It will help us also sell online very well, and plus enjoy also the domestic market in India with this kind of brand profile. We can also extend this to various other products, as I mentioned, because it's a home fashion product. It's not only a home textile product. We are into soft furnishing. So that's
Mr. Lalpuria, yes, we do get that point. But the thing is, we would like to see some numbers as well. You said it's $500 million in terms of annual revenues, the acquisition that you've made?
Yes, this brand was doing around 500 million across all categories at Bed Bath and Beyond, when Bed Bath and Beyond last year went out of the business, and at peak it did even 800 million. So this brand has been existing there for the last more than 178 years. So you can imagine that it has seen all kinds of disruptions, all kinds of growth.
No, while I get it, it's just a big number. So I was just wondering, how did you get it for 80 crore rupees, right? Like, it's around 4,000 crore rupees in Indian terms, if you look at the revenues, and you're saying it's a premium margin profile. So that's the reason my colleague also asked, what is the basis of the valuations that you got it at? This 80 crore rupees, is it an all-cash deal? How will you be paying that as well?
First of all, we are paying through our internal accruals of the parent company. So we are not raising any kind of debt. Secondly, we were already a customer to Beyond INC, and they saw that we have operational capabilities to justify that we can explore many areas to promote this brand across the globe. Their strength was not that they can promote this across the globe. Their strength was only the US and online businesses. So we can go to the retail with the set of customers which we have, with the kind of presence we have. Being the market leader, having the necessary operational capabilities, they saw a competitive edge in us as a partner to see that how we can leverage our strength to take this brand to new heights. And that therefore we negotiated with them a good deal, and we got this deal in 85 crores.
Okay, so you are saying that at its peak, the company in the past has managed to actually garner revenues of close to $500 million during the peak time, but now you've got it at a very good valuation of just around 85 crores. So that's very good to hear that. FY25, what is the internal target you've set in order to go ahead and turn around operations of that particular brand? What do you expect to add from that brand in terms of top line, if you could give us a sense?
We certainly are. We have an ambitious plan for this brand going forward, and we intend to have almost a revenue of more than 100 million plus in the next 2 to 3 years. FY25 will be better off giving you numbers post our Q4 results. So we'll properly provide you the numbers both on the volume and the value, what we intend to do with this brand and our company's revenue. But we see a big uptick using this brand to reach the core Vamsuta customers across the globe and see that we get those kind of revenue and margin profile going forward.
Mr. Lalpuria, so two-part question. First, are you taking any debt from this acquisition? Is there any debt in the books of that particular brand that will be merged with your company when it is acquired completely? Second, when you say premium margins, what is the margin that this particular brand was enjoying so far?
Now, first of all, we are not taking any debt on the books because we are buying an IP. Secondly,
no, is there any debt on the books of Vamsuta that you will be, not for buying the company, but is there any, in the enterprise value, is there any debt that they have?
No, they don't have any debt. So we bought an IP, so we didn't buy the company or any kind of asset.
Okay.
We just bought the IP. So that's what we did. And since this is an e-commerce entity, they have various brands. They have even taken up Bed Bath & Beyond, Beyond INC, then Bye Bye Baby and all different IPs when Bed Bath & Beyond liquidated. So they took all these IPs and we got this opportunity being a customer to them. So they felt justified that they should pass on this legacy to us. So we are better off with the brand. Now,
that explains the valuation, yes. Now that explains how come you arrived at the 85 crore mark. But my colleague has a question.
Thanks so much. So that clarifies quite a bit for us. Now, we just want a little bit of sense in terms of actual business operations. Q3 was slightly muted, number one, both in terms of volumes. But in the con call, you did manage to hold on to the guidance. And even now, you've given the same guidance. So shall we hold on to the fact that you expect volumes to grow close to 20% for FY24? And secondly, how did cotton prices, behave in Q4? Q3, you did gain a little bit in terms of margin expansion on the back of slightly lower cotton prices.
As I mentioned, Vivek, I'll be better off to give you guidance, on my Q4 call. Certainly, but we have an ambitious plan. We have strategized long back, 3-4 years back, venturing into B2C and D2C strategies. We have now almost 7 verticals for the company to diversify our business. It's not only selling commodity sheet sets, but we have fashion bedding, utility bedding, institutional bedding, our e-commerce business, our domestic business, our branded business. So we have almost 7 verticals now to work upon, where we are strategizing to see how each of this vertical can become a business of its own. And the way India is positioned with raw material, the way India is positioned on the supply chain side, onto the transparency and traceability in the world, we think and we believe that India should do well into supplying textiles, as we also see China Plus One strategy building up. So buyers and retailers are looking at a second source. Now,
all right. Mr. Lalpuria, yes. Yeah. Mr. Lalpuria, we'd like to apologize. We have to slip into a quick commercial break, but this conversation was very helpful and we did get a lot of clarity, but have to get into a commercial break. But we'll speak to you soon when your numbers are out. And as you specified, you'll be able to give us more clarity in terms of future growth prospects as well. We'll do one thing, we'll slip into a short break. When we come back, we'll put focus on life insurance data for the month of March. Stay tuned for that.
Welcome back to Midcap Radar. Well, life insurance data for the month of March reflects that all life insurers show growth except HDFC Life. Yash joins in with more details. Yash, could you give us a quick summary of how the numbers look like?
Well, of course, Vivek. So first 5 key takeaways, except for HDFC Life, all life insurance companies have shown growth in March as well as the fourth quarter. SBI Life and LIC have shown the strongest growth both in the month of March and fourth quarter. Max Life and SBI Life have shown the strongest growth in FY24. And finally, the life insurance industry itself has grown its premium at 16%, but private players have only managed to grow at about 2%. For HDFC Life, the March premium was down 20%, Q4 premium down 8%, March total and retail AP were down 28%, Q4 total AP down 10%, and Q4 retail AP down 9%. ICICI Prudential, better growth this time around. March premium growing at 13%, Q4 premium growing at 16%, March total AP growing at 9%, Q4 total AP growing at 33%, and Q4 retail AP growing at 12%. Max Life Insurance, the month of March was a little difficult, but overall the year has been good for the company. So Q4 premium growing at 22%, March premium growing at 3%, March total AP and retail AP were down by 9 and 8%. SBI Life Insurance, the year, the quarter and the month of March have been strongest for the company. March premium growing at 25%, Q4 premium growing at 52%, March total AP growing at 2%, Q4 total AP growing at 16%, and Q4 retail AP growing at 9%. Finally, LIC, also it's been a good year for the company. March premium has grown at 16%, FY24 premium growing at 2%, March total AP growing at 2%, though March retail AP saw a contraction of about 16%, but Q4 total AP growing at 18% for Life Insurance Corporation of India.
Okay, all right. Thank you so much for those details, Yash. So that's the picture when it comes to the insurance data for the month of March. Quickly, let's take a look at the markets because there's been further recovery from those levels. The Nifty is up 140 points right now. The mid-cap index too has recovered from the lows. It's down just 135 points. So that seems to be the theme, and it has seen a sharp spike in last couple of minutes itself, and Bank Nifty 2 is the one which is supporting that recovery that we are seeing from the lows. But with that, we'll take your leave on Midcap Radar for now. Your stocks when we return.